Hello and welcome back to another video. Today we are going to be taking a look at all of my portfolios. I have an ETF portfolio on Invest Engine and individual stocks and shares portfolio on Trading 212. Just to give you a bit of background, I'm 25 years old. I just turned 25 in January. I've been investing since 2021, but both of these portfolios are much newer than that. So bear that in mind for returns, etc. I have a mortgage. I work full time. I have a very normal job in construction industry, probably one of the lower paid jobs in the construction industry, but I enjoy it and I invest on the side to hopefully enable me to do more of what I enjoy in the future. And like everyone else, just trying to do the right thing financially. Okay, so for today's video, my financial journey is starting with my Invest Engine account. So this is a self-managed ISA on Invest Engine that I started back in 2022. So I had been dabbling at this time with an individual stocks and shares account on free trade. It wasn't an ISA. I didn't know what that was at the time, which is silly. Oh no, that's not true. I knew what an ISA was and I set this one up, but then I also wanted to invest in individual stocks. That's fine. So this is the start of my investing career, as it were. In 2022, my partner and I had a vision of purchasing a house. We have now done that. I'm sat in it. We've owned it for a year and a half, but this is why I started investing. So, I was putting money away every month. At this time, I was working part-time at Tesco's and also part-time at my current job and also doing a third-year architecture degree. So as you can see, these little dots show my buys. I was adding £100 a month, a little bit more here and there if I ever had some extra cash. And then things started to get serious. We got to £2,500 and I started investing in bigger lumps, £300, £300, £400. And, the bug for investing, as I'm sure most of you have, really took hold. So in total, I invested £4,100 in this account, and it has subsequently brought me back £1,550 at a rate of 48.78%. In terms of dividends, at one point I had dividend ETFs in this, but it brings in a steady £44 a year in dividends, which is fine, just gets automatically reinvested into this account. Okay, so this is probably what most of you came to see, which is my individual stocks in Trading 212. As you can see, I started this account in the start of the tax year 2024, so April 17th. I had put a lump sum of £2,000 in, which is almost exactly half of what I put in this year. Most of that was invested into Tesla and MasterCard and maybe Reckitt Benckiser. I can't remember, to be honest. So I've got terrible memory. And I've slowly drip fed a couple £100 a month in every month. And we've got 2 months until the next financial year or financial calendar. And I'd really like to get this ISA allowance up to maybe £5,000 if I can. I mean, that's a big ask, investing £500 a month for the next 2 months. That's never going to happen. But anyway, as you can see, I've invested £4,000 and we're currently at 5,400, which is a unrealized gain of 44.3%. Now, I know Trading 212 has done something funny with this rate of return. It's time weighted now, I think. So if you have a look at my portfolio, as it ticks under 5,400, great. Oh yeah, here we go, 26.69 unrealized result. That's probably a better indicator. So as you can see, this is the list of my portfolio. Tesla sitting at 21.3% of the portfolio. It's a large position. So I originally bought, I believe, 7 shares of this for $166. And I sold 3 of those on the way up at about £300 or $300 per share, which was, with hindsight, a mistake. If I'd held, I'd be sitting on a bit more right now, but such is investing. I learnt a lesson there. But my general thesis, I'm not going to go into it too deeply because Tesla is a highly covered stock on the internet and my opinion is not going to help that. My general thesis is, I bought when it was the worst performing stock in the S&P 500 for $166. And at $166, I think any one of Tesla's businesses could grow could decline, go sideways, and I'd be relatively okay. So going to leave that one there. My second biggest position, which has grown to be my second biggest position, I should say, is a company called Reckitt Benckiser. I have done analysis on this one, but I deleted the video because I hated the sound of my own voice. But here we go. So I've got a cost basis of 4,166 pence, or £41.70. And I'm currently up 27.84%, which is a lovely little return, £162 in gains. This company, I bought it pretty much exactly at the dip historically. I'd love for it to go back up to £6 a share. Don't think it will. I think there's some parts of the business that are really holding it back, costing a lot of money and not returning enough cash at the minute. It's trading at 24.47. I'd love to know the forward PE if it's on here. No, doesn't matter. It's trading at 24.47, which is pretty high for a UK-based company. So this is just this. I'm not going to add to this stock, but I'm just happy to see that it's in the green. So the third biggest stock, which is a stock that I am looking to add to, is Google. So I bought this when all the other Mag 7 companies were sort of growing and putting big numbers on their stock price, and this one has kind of gone sideways for a long time. It's generally undervalued as part of the Mag 7. Trades at a 22.55 PE, which is crazy when you think Reckitt Benckiser trades at a 24. But this is another one that's, a big part of it is basically I'm buying Waymo for free, which is Tesla's biggest competition, because it's completely priced out of the stock essentially at this price. The next position, this is a relatively new one, is ASML. I think I bought it back before Christmas for 686, so just around here. It might have been this dip here, I can't remember correctly, but if this one goes back down below 700, I'm definitely going to be interested in looking at it for another go round. I'd love to boost this up even more. It's again another AI play, but chip making isn't going anywhere. Next holding, this is an even younger holding in my portfolio. It's Booking Holdings. I was originally interested in investing in Airbnb. I thought their report was okay. I love the app. I think people are more likely to stay in unique places than they are hotels. I think that's just the way we're going to go. But Booking Holdings does everything: flights, experiences, car, travel, the whole lot. And it was up at 5,300, which, I looked at it down here, didn't buy it. It raced up to 5,300. I thought, crap, I've missed the boat there. And then, it dropped $500, and I did not make the same mistake twice. So I bought in slightly higher than I wanted back in the summer, but still, $4,300 cost average is fine. We'll see how that one goes. It's not been in the portfolio long enough to make any decisions. The next stock then is MasterCard. So I've held this one for quite a while, back at the start of the portfolio, I believe. And MasterCard, you know what you're getting. It's a massive business with steady growth. So I'm not going to comment too much. It's up 25%, which is great. Okay, so Rentokil Initial is a pest control business, and now an international pest control business. Sort of the general thesis from this one is that, pests aren't going anywhere. We don't eradicate species of pests particularly well. So therefore, Rentokil keeps coming back, gets repeat clients. The reason the stock has, performed not very well, it made some acquisitions to break into the American market that, have yet to materialize any profit, because of, hello dog, because of strategic reasons. So once they've ironed those out, I'm sure this will return good returns for the investor. Slightly up is this investment. Okay, so the penultimate stock in the portfolio is a 7.38% of my portfolio is Salesforce. So I bought it back in May, I believe. It might have even been January. I really should remember where I bought these stocks. It raced up really quickly and kind of scared me out of purchasing more, essentially. Salesforce is definitely riding on the AI wave, and at this point I've got Tesla, Alphabet, ASML, and Salesforce, which are four AI plays. So, we'll see. I've put a price alert on it for $300. If it gets down there again, maybe I'll have a look at purchasing. I think it's a great business, and I think they are actually utilizing AI in a really amazing way. So we'll see how that one goes. Okay, so the final stock in the portfolio is Money Group. I did a video analyzing their latest report, which was their 2024 annual report. So go check that video out if you're interested in this stock. It's currently down 8.8%. Trust me, it was a lot worse than that not long ago. So I bought this stock. It was really pummeled after COVID-19 and interest rates just destroyed the business, essentially. People weren't looking for credit card deals and just weren't comparing. It kind of makes sense that when interest rates are high, people are looking to save money, but it just hasn't worked out that way for this business. But they've turned it around. They had a decent earnings report, like I said, on the 18th, I think, which has sent the stock up. But I won't be adding to this position either because I just don't think it grows quick enough for me. It's quite slow grower. It pays a dividend and it's got some other benefits, but it's my least favorite stock right now. Okay, that's going to do it for today. It was a quick overview. I think it was quick. It might be quite long. It was a little overview of my portfolio, my investing journey so far, which I will go into much more detail in the future. I'm just going to keep going, keep plodding away. If you have any comments on the portfolio, or I didn't mention much about the thesis for these stocks, but if you have any comments or just general chit chat, put it down below. I'd love to talk to you guys about investing. I think that's enough. So there's a dog down here that I'm petting. Thanks for watching. Don't forget to like, comment, and subscribe. And I look forward to making the next video.